Hi guys, Steve Crawford from the XY Academy, and today I'm answering the top three most frequently asked questions I get from my training program, Your Spending Coach, where we teach other advisors, mortgage brokers, accountants how to build a personal money management or financial coaching program for their clients. So the number one question that I get always comes back to the budgeting side of things, which is when should we start using the information that we've got? So do we go backwards to get existing client transactions, or do we start from today and we go forwards? The answer is going to be it depends. And if you use one of the main software providers, so MoneySoft, MyProsperity, Money Brilliant, they're all going to get retrospective data somewhere between 45 days and 3 months, and a lot of them are looking at actually expanding that back to 365 days at some point in the near future. So we all sort of know the further back you look, the more cloudy it seems to get from a client's point of view, mainly around the understanding of what they're actually spending money on. So our view here is have your own view of what you want them to actually look backwards for. If it's around getting a good base to start your budget setting exercise from, so they're not just making it up from scratch, then that's fine. But understand that that's really only going to be relevant for what we call living expenses. So education, food, financials, housing, health, transport, and utilities are the ones that are typically caught up in that one. And that's a good idea to use retrospective data. In our business, we use benchmarks that are based on our clients' actual spending data from the previous financial year, and we use that as a proxy. Spending data going backwards, it's not going to be that valuable, and the reason is most people don't remember what they spent money on 2 weeks ago, let alone 3 months ago, so you're going to get a lot of guessing. Also, our view, clients shouldn't be held accountable to budgets that they never signed up for. And finally, spending really is about how do they want to go from this point on. So we'd say use the software as it gives you the option to have 3 months worth of data, keep the living expenses information and use that, get rid of the spending data and set the budgets from scratch for the beginning of the next month or the beginning of this month and going forwards. So that's the number one question that I get. Number two is around the banking side. And again, it comes down to when do we start? Right. So we talk to our coaches about having spending, storage, and savings accounts for their clients. And the idea here is help them see what they've got available for spending, that their money's going into savings, and they've got enough to cover their expenses. Typically, obviously, when you get a client, they're going to have their own bank account structure already set up. And your job is to help them migrate from a system that might not work 100% to one that should help them hit their targets. Now, this is all caught up with sometimes whether or not you're actually helping the clients restructure, and sometimes that means refinancing to a different lender that provides the structure that the clients are looking for. During the refinance process, if this is happening, then you're going to be getting bank accounts closed down, new accounts and loans getting set up. And quite often my coaches ask me, so do I wait until the refinance is finished before I set the new accounts up, or do I do it today? And the answer is, well, it's sort of a bit of both. What you want to try and get out of the client's bad habit set straight away is mixing their savings and their spending and their expenses into one account. So we hate that. You should have the clients having savings, which is paying off loans and money going into savings accounts. That needs to be separated from spending money, and definitely separated from the expenses side of things. So we'd suggest you sort of implement a hybrid setup to help them get that done straight away. And then potentially when they're in the new loan structure, new refinance structure, then you'd have your buckets set up the right way. We spend a lot of time on this in the workshop because in our opinion, banking's the most important of the three components: budgeting, banking, and reporting. And if you get it set up right, the clients get the best outcome. Quite often we see a lot of coaches skipping over this part because it's either outside of their wheelhouse, or they don't have a lending advisor that they can work with, or a lending specialist to work with. So it's one that you definitely need to think through, and don't just leave it up to the client to deal with. The last one, number 3, most commonly asked questions, is one of my pet bugbears, and it comes down to the reporting side, and that is, does the financial planning software integrate with the money management software, being My Prosperity, MoneySoft, Money Brilliant, Xero? And the answer is some of them do and some of them don't. But the real answer is, why do you need it to integrate? My view, financial planning software is about long-term projections using big, wrapped up, rolled up numbers. Money management software or financial coaching software is about micro levels of information and going backwards in time. And one's about going forwards, one's about going backwards, and your rear vision mirror stuff with your money management software is all micro, and your financial planning software is forward-based, long-term numbers. Why do you need them to integrate? The only thing you need is total expenses, spending, and an accurate savings figure. That's all the client cares about. You can validate income at any stage from their pay slips and details like that, but as long as you can identify real expenses, real spending, and therefore a real savings figure, that's all you need. And this is coming from a guy that wasted a lot of time trying to get integration off the ground with our software at the time. And we did. And in the end, it didn't add a lot of value. So save yourself some time, save yourself some heartache. Yes, the planning software and these money management guys are going to integrate, and that's fantastic. But take it at this level that they're going to give it to you, and don't worry about breaking it up too much. Guys, if you thought this was useful and you think you need a little bit more help, we'd love to see you at one of our upcoming workshops. So just go to yourspendingcoach.com.au/workshops to find out when the next one's on. If you've got any questions, you can email me directly, steve@thexyacademy.com. Otherwise, if you've got anyone that you think this would be beneficial to, share it around. We'd love to get these stories around money management and financial coaching out as far and wide as we possibly can. Have a great week, and I will talk to you again soon. Bye.